Hello and welcome to Business Television India. I am Piyush Jain and we are going to have an interesting conversation with our market guru today. Primarily again, the fourth quarter earnings, basically those are going to start. That's the last quarter again. That's actually the past year. But the next year also again is looking much brighter. The average earning expectation is around 15% for the markets for the next year here. So the question will be that have the markets already priced in the fourth quarter earnings? Which sectors perhaps actually are still providing opportunities, and also again in terms between the fourth quarter and the next year where actually we are going to see much higher growth here. So what basically is the bias here? Let's try and find answers to all those questions with our market guru today, Sunil Subramaniam, the CEO at Sundaram Mutual Fund here. Mr. Subramaniam, welcome to the show. Fourth quarter earnings, it's a reflection on how perhaps the company, the sector actually would have done in the fourth quarter. What's the take here? Like where we should be seeing winners, what we should be expecting from the sort of earnings here, and also between the sectors, how secular is the trend looking? Are we looking on basically takeoff from the third to fourth to the next first half year?
See, okay, if you look at the earnings which are going to be reported, there are three components to the earnings outlook. First is actual fourth quarter. Second is full year FY 17-18. No, 17-18.
Okay.
And then guidance for FY 18-19. So if you now take this, the full year is not so relevant because you had fading effects of demon, GST coming in the middle and doing all those lafdas. The fourth quarter is slightly more reflective, but it reflects the seasonality of that quarter.
Right.
So neither the full year earnings nor the fourth quarter will give you a proper view of
full
what,
reflection
because
of how FY19 is
for market, you know what it is, right? Buy on the rumor, sell on the fact. Reported earnings is a fact. The rumored earnings, that's going to come. Now, two things on the guidances. First is that base effect. Because last year all the quarters were showing bad effects.
Right.
The base effect, like you see on your inflation and everything else, IIPs, you will see a base effect on earnings.
Right.
So you mentioned 15%. As a fund house, we think that 17 is more likely to happen.
That's more bullish than the average earning.
The reasons for that are that while the last year's earnings were supposed to reflect your pay commission increases, the good monsoon, a lot of that money got into the savings rather than into consumption.
Right.
So you saw mutual fund inflows going up. You saw the money to get spent. We expect is when this year that will happen. So
why do you think so? Like why it happened like last year, and why basically that's going to transition?
Because see, the problem was that a lot of these states implemented the pay commission only gradually. Right. HRA announcement also happened in the second half of the year. Right. So the full impact of your monthly take home going up, and then basis that to go and look for a bigger house, buy a bigger car. Yeah. All those thought process will happen now with the
now you're holding money. The money actually has come.
That's come. So initially they would have parked it in a lot of other vehicles. The second aspect is that this is a election year, right?
Always number of cash heavy year, always the consumption heavy year.
Consumption heavy. Why? Because government spends on rural India. Political parties spend on rural India, candidates spend on rural India. Right. And electioneering means more jeeps.
Absolutely.
More. So there are multiple factors to think that, and SkyMet's forecast.
Normal monsoon forecast.
Normal monsoon forecast. So all factors put together, we think that the top line growth is going to be fairly strong on the consumption front and the related front. So which are the two consumer durables? For example, that's the high-end purchases. Auto. Right, auto, both agri auto like tractors, power tillers, and all that, and regular thing like people upgrading to motorcycles to cars. Okay. So we expect that overall consumption top line should grow fairly healthy. Bottom line, the cost inputs, your oil price rise, so the margins may not grow that fast. So we're actually expecting a 20%-ish top line growth.
Right.
But we wrote 17% bottom line growth.
Slight
because the crude, that impact, crude's cascading impact.
Also metal prices.
Metal prices. So I think those we'll see here. And this I'm talking it's large caps.
Large caps.
I think mid caps will deliver about 20 and the small caps will deliver 23-25%.
You're not thinking that the mid caps companies or the suppliers are going to get slightly skewed by the OEMs also? That's not going to happen?
Not going to happen. We in fact feel there are a lot of mid cap consumption companies. We don't realize it, right? I don't take company specific names, but the tendency to think that mid cap is only a supplier right? Mid caps are also sellers in the consumption space. So we think that the earnings season is going to be positive, and whether market has discounted that fully, we think that market has pricing in an equity risk premium higher because of the political events happening outside India and the elections inside India. So there is a discounting factor applied to this scenario.
Right, sir. Just allow me to address the flashes. They are very important flashes which are coming on the screen. Supreme Court actually has disallowed out of the court settlement for the Binani cement.
Yeah, absolutely. So therefore, that is out of question now. I think unless they put in a fresh plea and say that, look, we will maximize value for them, then once again COC will say it will go back to the same court. Yeah. What's your take, Sunil, on this?
Yeah, you're right. I agree with your analysis there. That ultimately the stock market is interested in value maximization. The lender is interested in loss minimization.
Right.
Right. And public sector lenders are interested in protecting themselves from a process that they have not followed the process.
Yeah, right.
So I think your analysis was bang on. I think.
Yeah.
That's
Absolutely. And,
I think Anku is still with us.
Absolutely. So let me ask Anku, and she was trying to complete the answer here. Anku, coming back to you, and we were trying to ask you that as per